Next up, we look at Wall Street, which closed mixed as investors digested already delayed and weak U.S. jobs data. While that is likely to push Federal Reserve to cut rates even more next year, investors remain cautious. In this next report, we get into more details. Take a look.
Wall Street's main indexes ended mixed on Tuesday, with the Dow dropping 0.6%, the S&P 500 shedding about 0.25%, while the Nasdaq gained roughly 0.25%. A delayed Labor Department report showed non-farm payrolls rebounded in November following a decline in October, and the unemployment rate rose to 4.6%. Eric Ditton is president and managing director of the Wealth Alliance.
The stock market did not like the delayed payroll numbers, even though the November numbers were higher. We came in at 65,000, was supposed to be somewhere around, or 64, is supposed to come in around 45, better. But it was October that got the markets upset with a loss of 105,000 jobs, which, by the way, that makes job losses in 3 of the last 6 months. Not to mention that Mr. Powell has said it's possible that we are overstating job gains by 60,000 per month. So you kind of have to scratch your head and wonder if the data is real.
After Tuesday's data, investors are pricing in interest rate cuts of at least 58 basis points next year, more than double the 25 basis points signaled by the Federal Reserve last week. Stocks on the move Tuesday included Pfizer, which slipped nearly 3.5% after the drug maker forecast a challenging 2026 due to weaker sales of COVID-19 products and squeezed margins. Fellow health insurer Humana fell 6% after the company announced unspecified leadership changes. Shares of B. Riley jumped more than 50% after the investment bank reported a profit for the second quarter. And shares of Comcast rose nearly 5.5% after CNBC financial journalist David Faber speculated about potential involvement by an activist investor.